Right, so I've filmed this video about 5 different times. I keep running into the issue of the video getting too long because I understand that some of you don't get all the technical stuff. So I've tried to do a more basic explanation of what's going on in Ethereum. But I do that and then I get into the technical stuff and then the video gets to be like 20 minutes long. So what I think I'm going to do is I'm going to do one video on the basic TLDR stuff for the people that don't understand the technical stuff or want to understand the technical stuff. I'll give you everything you need to know about Ethereum in a more basic manner. And then I'll film another video where I get a little bit more techie and explain all the mitigations and the order blocks and everything like that and where we can expect to see perfect reactions away from. But first of all, I need to map out what's happened in the Ethereum markets. Quite simple. This is what a crypto crash looks like a 60%, 65% up move. This is where your taxi driver is telling you to buy Bitcoin. You've heard that saying before. So this is where the retail interest is. How does a crypto crash happen? You have a massive parabolic up move. You have retail buying, which is huge amounts of retail traders, your taxi drivers, your dad, your uncle, hearing about it at the dinner table, going and buying Bitcoin, all happening up here. And those retail traders get absolutely eaten and you have a crash down on the other side. And that is how a crypto crash happens. What we've seen here is we saw really nice accumulation, a movement upwards, a leverage squeeze, another nice accumulation and movement upwards, not parabolic movement upwards. So we obviously saw a nice pump here and then we saw a very staircasey movement up through the all-time high. Even upon actually breaking the all-time high, we were still having very staircasey movement, which is not parabolic. Which signals to me that retail traders are not entering the market and we're not going parabolic in Ethereum, and the big pump is still yet to come. This is really nice to see because after we saw this all-time high get taken, and it literally did about a 10% all-time high, so it's really not a parabolic move and enough to make a crypto crash happen. We then saw a beautiful move downwards and a mitigation again before more staircasey downwards movement. What we are seeing now, instead of parabolic upwards movement, is we are seeing a bit of parabolic downwards movement. So a lot of panic selling in the markets, which is obviously very good for us as traders. We like to see panic selling as where we like to buy from. When people are dumping their bags, that's the best place to look to buy. So now that we understand that we made an all-time high on low volume and not much upside. So this is basically Ethereum showing that it can make an all-time high without going parabolic, which is really good. It's called intent. So in the Forex markets, we would mark this out as a point of intent here. So this is the intent in the markets as it's broken the new all-time high, mitigated away, and we're now returning down to points of orders. So we're returning down to buy points. The buy points are mapped out here, here, and here. Cool. So these are the areas to look to enter into buys from. Personally, just because of current price action, as long as this holds up here, these levels hold and don't get broken, we're likely going to come below this first point of buying, so I would eliminate that one already. The second point is this 2500 level. I've spoken about this level a plethora of times, so many times. It's such an important level. Psych levels are really important in price, so a psych level is a number that you see in your mind as an important number. So something like $10,000 Ethereum, that's a psychological level. It's a really important number. That's what everyone's looking at, and everyone says $10,000 Ethereum as it's a big number in their mind. Something like $100,000 Bitcoin is a psychological number. $50,000 Bitcoin, a clean, easy, simple number, psychological number. The actual definition of psychological numbers in Forex is 0, 2, 5, 8, and 0 numbers. So 2,000, 2,200, 2,500, 2,800, and 3,000. And the most important of those being 3,000, 2,500, and 2,000. So the 0, 5, and 0 numbers are always the most important. 2,500 is a quarter of 10,000, so 2,500, 5,000, 7,500, and 10,000 are all, in my opinion, the most important psychological numbers in Ethereum. So this 2,500 number already is a great confluence for buys. The other thing that I find really interesting is, I'm not sure where the actual fixed range place to draw it from is. Is it down here? Might be down here. A little bit further back, maybe. Yeah, there we go. So if you draw out the fixed range tool, to explain what the fixed range tool is quickly, for those of you that don't know, these are volume signatures down here, show volume and price. So this candle here, the leverage squeeze, it corresponds to this candle in volume. But obviously being vertical, it's kind of hard to tell where the volume is and assign a level to price. So what the fixed range tool does is it turns volume sideways and allows you to view volume on a natural price level. And as you can see, the fixed range volume tool is telling us that the highest point of volume is in the 2,500 level. which is a really, 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 really good confluence. And you can move it around a bit and stick it around a bit, and it might jump around a little bit up and down, but it's mainly staying around that level. And the one thing you'll notice is it's always hitting this candle. So the idea of order blocks and mitigation, I won't get too deep into this as we're not trying to get techie, but you have three market states. You have consolidation, contraction, and expansion. So a consolidation is the sideways movement, a contraction is sideways movement, and then the movement away downwards, that's a contraction. And an expansion is a sideways movement, and then movement away upwards is expansion. So what was I saying about that? Oh yeah. So the consolidation is also referred to as an order block. And what we like to see after we see this consolidation and contraction, we like to see a return to the order block to do something called mitigation. So the person that sold away from here, they want to bring price back up. Once they've seen that they can sell away and price is willing to let them sell away, they want to bring price back up to their original entries and sell away again. That's the idea of mitigation. So this order block down here, this little red sell before you buy candle, has not actually been mitigated. And the fixed range and the 2500 both fall within this one candle here, which is why I'm really, really like it as a level to buy from. And if you have a look, if we go to the high of the candle, there we go, and draw a line out, I thought it was mitigated, but it actually didn't touch, it actually didn't mitigate this, which is really important. It means that this is still an unmitigated level and it still needs to be mitigated. So when we see price come down, you will see a reaction away from this candle, and especially this 2500 level. So the first point to look for in price in your own analysis is going to be this 2500 level. That's the first level to see a reaction away from, and I believe we will see a really nice reaction away. If we react away from this 2500 level and we take these highs up here, then we know that we're going to start moving bullish on Ethereum. So that's the first thesis you need to understand, is the 2500 level thesis. Coming down, mitigating the 2500 level, and then moving upwards for our bull run in Ethereum. The reason that this might not happen perfectly is that we also have NFTs to consider. The NFT market going crazy obviously is bad for the Ethereum market as they're inversely correlated assets, and we also know that Coinbase NFT is coming out. So it's very difficult, because for me at the moment it's hard for me not to say that we're just going to come down, hit 2500 and move upwards from a price action perspective. That's what it's telling me. But the fundamentals at the same time are telling me that NFTs are going to go absolutely nuts, which obviously is weird for the Ethereum markets. So we'll just have to wait and see how price reacts to this 2500 level. I'll keep you guys updated, but this is a level you want to be keeping your eyes on. Aside from that, if we pull out the fixed range indicator again and draw it out over a slightly bigger area, you'll see that the fixed range indicator is falling in this consolidation here, which is unmitigated. So after we had this massive crypto boom and massive crash, true boom, true crash, not a fake boom and a fake crash, we had this consolidation down here and expansion away. And this consolidation actually hasn't been truly mitigated yet. So we understand that there is a massive, massive, massive amount of volume and massive amount of orders in this zone here. So the other thing we have to understand is that although we will get a reaction away from the 2500, that's almost a guaranteed thing. I mean, I'll be leverage trading away from the 2500 on the lower time frames because I know it's going to give us a reaction. But we do have to understand that if the 2500 level doesn't hold, if NFTs continue to go crazy and Ethereum continues to want to go downwards, we are going to return down into these order zones down here. And this is essentially the last point of refuge for buyers on Ethereum. If we don't reject away from the 2500 level, if we do come down to start testing this, it's slightly more bearish for me on Ethereum. The points to look for in this range is going to be the 50%, obviously, so I'll mark that out. And we'll take a fixed range out and draw out the point of highest volume as well. Turn the kill zones off quickly. So draw out the point of highest volume. If it loads, which it isn't. Right, it's fucking annoying. Okay, let me try it again. If it's not working with me, I might have to pause the video quickly and come back when it actually works. Alright, I'll pause the video, I'll come back when it actually works.